Good afternoon, everyone. My name is John Paul, founder of Daytradetowin.com. What I want to show you today is a little bit on price action, and especially on one of the methods that I teach, which is based off of looking at how the day is progressing, whether it's going to be trending day or a whipsaw day. Now, you can find plenty of videos on the YouTube Day Trade to Win channel, which has many free educational videos. I'm going to review one of the actual free methods that I teach, and it's happening right now as we speak. But before I show you what we're going to do and explain to you step by step how this works, I want you to understand that every single market offers an opportunity to take a trade. But first, let me show you what's happened. Today is February 27th, 2013. And so far we have a day that is turning out to be a trending day, as you can see here on the Emini S&P. Now, the method that I'm going to show you is not specific to the Emini S&P. Price action is price action, so you can look at this on stocks, you can look at this on any type of currencies or forex or commodities, futures. Emini S&P happens to be the market that I prefer to trade. All of a sudden, within the last week or so, it's just exploded as far as volatility. It's been very slow for a very long time. Hopefully this volatility will continue. It's not going to die out. But as you can see, this is a trending day so far. What I want to learn is in advance if I can definitely know that this is going to be a trending day or a whipsaw day, a back and forth channel type of day. How is this going to help me take a trade, or how is this going to help me in order to look for an opportunity? So what I like to do is I like to break up the day into three sections. It doesn't matter if it's the London Open, the European Market Open, or the US Open. The Asia Open, I'm still not convinced that we have enough action, but this is price action and it should work in the same way. Here on the US Open, we have market open here, Eastern Standard New York time, 9:30 to 12 o'clock, and then you have from 12 o'clock to 14:30 where we are right now. That's why I decided to turn on the recorder to show you this, and then from 14:30 until the end of the trading session. I split up the day into three separate parts, this being the A part of the day, this being the B part of the day, and this being the C part of the day. And you can actually do a search on the YouTube channel for ABC trading pattern, and I go into a little bit more detail than what I'm doing today. But basically, I am referencing what's happening here in the A part of the day and comparing it to what's happening in the B part of the day. And where we are right now is I am comparing what's happening in the B part of the day into the C part of the day. So each section of the day has its own characteristics. The A part of the day, as an example, is when we have, right as the market open, swing traders, day traders, robots, trading systems, all positioning themselves here in the early 2 hours, 2.5 hours of the day as the day progresses. So expect to have A as the most volatile part of the day. In the B part of the day, it's usually referred to as the lunchtime area, or it's the slow part of the day. And so the B part of the day, the middle part of the day, have an expectation that the market is slowing down as we approach this. Unless there's a reason to buy more or sell more, to continue up or continue down in a trend. This could be news related, news driven, it could be really any reason. But it really doesn't matter, because what we're doing is we're following price. And the last part of the day, my expectation is a possible late day rally or late day sell-off that can occur here as the day comes to a close. So these three sections of the day, you should know as a trader in any market what to expect. So in the A part of the day, what I like to do is I like to take the range here, the highest high and lowest low of the A part of the day. And as we move forward into the future, my expectation is that the B part of the day is going to be whipsaw or slow, unless there's a reason that traders and systems are buying more, moving this market higher. So what am I looking for? Very simply, I'm looking for 2 consecutive closes above or below the range of A. Very simple. Now typically this doesn't happen because, as you know, or you may not know, trending days only occur about 15 to 20% out of the entire year. So what you're going to get is a typical whipsaw back and forth between the range of A that was created already. But when we have an opportunity to see this market close higher above the range of A, that's when I think of this as a trending day. This is almost a forward-thinking, even a leading indicator, if you want to call it a type of indicator of price, that tells me that the day is trending. So now we have price closing consecutively 2 closes, 1, 2 here, above the range of A. Let me just expand this here a little bit. Now I say to myself, the day will most likely trend higher. It will close higher than where we are. Now you should have specific targets. I like to look at the ATR, the average true range, to give me specific targets. I have a ton of videos explaining what the ATR and how I use it are all about. But basically, at this point, just understand that the market is heading higher. Trending day automatically should be imprinted in your mind that we're going higher. Now, market starts to move higher here. Just expand that here. And now what I want to do, and here we are right at 1430. This happens to be the first 2.5 hours of any trading market. 2.5 hours, whether it be the London Open or the US Open. This is the next 2.5 hours. Okay. And now we have here a relationship of the range of B, which is here is the highest high of B, and the lowest low of B. And here's my range. Okay, now up to this point right now where we are, I do not have a valid entry because, again, I'm waiting for 2 consecutive closes above or below the range of B. We may have a late day rally or a late day sell-off. So wait for price to verify whether the market wants to go higher or lower. 2 consecutive closes will lead you in the right direction. So up until this point, I don't have a valid entry, long or short. Basically, I'm waiting for price to prove to me where it wants to go. It may just whipsaw back and forth like this. But as far as a trending day, it's already established that it's moving higher outside the range of A. Okay? I teach this in the power price action. The Atlas line is software. Actually, let me show you what the Atlas line did today. Here's the Atlas line. To go long here at 1500. Start of the day. And so here we are in C. I'm looking for a late day rally or late day sell-off. I have a class later. Hopefully I can get in here before I start teaching the mentorship students later here in the afternoon. But this is what I'm looking for. And if the day is correct, this is a trending day moving higher, I'll catch it and I'll see it. If it's going to fail and give me a full-on late day sell-off, I'm going to catch it as well. I'm looking for that. I'm looking for that. My name is John Paul. Any questions? Support at Daytradetowin.com, or you can always call us at 888-607-0008. Have a great trading day. Bye-bye now.